Welcome back, you guys, to Andy the Banker Show. We have a lot to discuss today. We have to discuss about all the Trump tariffs that's occurring right now in the markets. We have to discuss about what happens if we actually have a recession. Is that bad for us? Is that good for us? And then I want to share with you guys what I'm doing with my portfolio, any portfolio updates that's going to be occurring. And not only that, we're going to also talk about my outlook for the year and how we think we're going to end the year end. So let's first talk about the Trump tariffs. Holy cow, we have so much Trump tariffs that's occurring in the place. We have the Trump tariffs to Canada, to Mexico. And not only that, you also see tariffs wars in other countries as well. Like you see China putting 100% tariff to Canada on their products, on some of the products they have, and then vice versa with Canada to China. And when I think about all of this, I mean, the issue is that it creates a lot of uncertainty. All right. And here's why uncertainty is bad. Investors can handle good news, they can handle bad news, but when it comes to uncertainty, it's tough. Okay. Like for example, imagine you're the CEO of a car company like Ford or GM. Well, when things are uncertain, you can't make a decision. And if you can't make a decision, the business is not progressing. So even though you have bad news or good news, you know the outcome. You know what to plan for. Like, okay, you got bad news. Well, how are we going to move forward? When you have uncertainty, you can't really make a decision. And in the case of these car companies, in the case of let's say Boeing, in the case of Tesla, there's so many companies affected right now. They cannot make a decision. And that's one of the things that's causing investors a lot of fear. And you see it in the market right now. So many companies just coming down in valuation. If I read it correctly, I believe in the last month we lost like more than $1 trillion in market cap in the stock market. So a lot of stuff that is occurring in the markets that's bringing the prices of stocks down because of uncertainty. And I believe that once we're past these Trump tariffs, once we have more certainty, we'll be good to go. And the reason why I do think that Trump is doing this now, I agree with the media on this that might as well get these hard decisions that's going to impact the markets in the beginning of his term rather than when it comes to midterms next year. Like it would not be a good look if the stock market is collapsing down while midterms is happening. At this current year, we'd have no elections coming up, so I see why Trump would want to do it now rather than later. And the second thing I want to discuss about was about recessions. So many people are asking, Andy, we have a recession coming up. What happens if recession happens? Should we sell before the recession happens? And I'm going to be very honest with you. If if and by the time a recession was to happen, it's probably too late to sell out of your stocks. By the time that you read we have a recession or we are in a recession on CNBC or New York Times, it's probably too late. By that time, the stock market would have priced it in. You're gonna see your stocks fall a ton. All right. The crazy part about recession is that you don't know you're in a recession until you're in one. Right? It's not like you're reading it in the history books where you might have thought to yourself, Andy, if you're gonna have a recession coming soon, just sell out of your stocks. Well, it's not so simple. Like the stock market prices in recessions before they actually occur, and by the time a recession occurs, people are not surprised. Like by the time you see that news article on the news saying we are in a recession, you're probably not gonna see the stock market move that much. So as a result of that, uh, I don't try to time the market, you guys. This is one of the things I do not do. A way to combat this is to do dollar cost averaging, which is that every 2 weeks, every time I get paid, I literally put money into the stock market, buy more and more stocks. Now, with that being said, if we happen to have a recession, it's not really end of the world. I mean, as a younger investor, you're telling me that I get to buy companies 20%, 30%, 40% cheaper than all-time highs? Absolutely, I would take that deal. You have to realize that recessions are a normal part of the economy. Recessions are a normal part of the system. You cannot be expecting to invest for, decades and not have a recession. It's completely normal. And since they are normal and we're going to have more than one recession in our lifetimes, might as well have them as soon as possible. I'd rather go ahead and get done with recessions now so that I'm happy to go ahead and buy the amazing assets in the stock market at a cheaper price than if I were to just, we have a bull market and let's say I'm 60 or 70, we have a recession, I lose a big chunk of my valuation. So they are normal. It is a part of the system, and you should be expecting more than one recession in your lifetime. The only issue is that I can't tell you when the recessions are going to happen. All right, that part, if you'd be so rich if you were able to time the recessions, but because I'm not, I essentially just dollar cost average. Now, what moves have I been making in my own portfolio? I have made a couple moves. I have been dollar cost averaging into Microsoft, dollar cost averaging into Google, and these two companies, I just think they're still going to make money. Like in cases of, let's say, worst case scenario, we have these tariffs, we have these, um, we have these restrictions on trade. These companies, I don't know, the products they serve, they're still so useful to humanity, to society, that they're gonna keep on increasing their revenues, increasing their net incomes, increasing their net profit margins. So as a result of that, I keep on buying into these particular companies because when it comes to the AI trade, when it comes to data centers, I just think they're so important. So as a result, I am buying them. Now there is a one sell I have made. I have sold half of my Chipotle shares, which is approximately around $12,000. And immediately right after selling Chipotle, I put that money into Google stock. All right. Now, I don't want you guys to give you the wrong impression that Chipotle is a bad company because I don't think so. All right. I still have $12,000 in Chipotle stock. This is a company I still believe in. I believe that 20 years from now, they're going to be bigger than they are now. I still believe they have a lot more to grow internationally and domestically in store count. I love what they're doing with the hot honey chicken. I love that every 6 to 12 months, they build a brand new menu item onto the system. I just love that. So, I'm still bullish on the system. It's just that when I saw Google going down below 20 PE ratio, when the price of Google was just coming down, getting crushed so much, and I just see how amazing of a company Google is, like I had to buy it. I just had to. The price point was too attractive for me to skip out on. So that's one of the moves I made. $12,000 of Chipotle stock, put it into Google. Now, in terms of my outlook for the year, I have a couple things about the outlook. We started the year very weak. We had a big drop down in the stock market. At a certain point, we're gonna run out of sellers. At a certain point, uh, people that want to sell, they've left. They're flushed out. So I actually do believe that we're going to be uh, higher in S&P 500 and higher in the stock market. So as a result of that, you see me buying into the stocks. All right, I am buying more and more every 2 weeks. I still continue to buy into the same stocks that I have been buying. I have been thinking about a fifth company to be adding into the portfolio. So I'll be very honest about that. I am the way that the stock market has positioned itself this year. I've been very happy with because the lower the stock price goes in value, it gives me a lot more protection, right? When you're at all-time highs, there's so many people that could sell out of the stock. But when you are 20, 30%, 40% down in a particular stock from all-time highs, there are more buyers that could re-enter the market. It's one of the issues with FOMO, right? People are scared of FOMO. So as a result of that, I believe that we could be higher. I'm expecting maybe less than 10% raise in the market. It's still a raise, but maybe not like the past 2 years. So as a result, I am still bullish, still happy to buy into the market. And if the stock market keeps on going lower, and let's say I'm wrong, worst case scenario, that's I'm also okay with that as well. Like you're telling me that I get to buy the same exact companies I was buying, but at a cheaper price. Hell yeah, I want to do that. So when I do buy that fifth company, I will go ahead and make a YouTube video on it. Then it'll have to be based on something that is reoccurring revenue, something that can make money. Doesn't matter how the economy is doing, and something that I personally use myself. So with that being said, you guys, thank you so much for joining the Andy Banker Show. I'll see you guys on the next episode. Bye bye.